Friday, July 3rd, 2020, Maneco 64, home of alternative economics and contrarian views. Today I want to talk about whether the CMBS market is the new subprime market that brought the whole system down in '08. What is CMBS? Well, it's Commercial Mortgage-Backed Securities market, and I'm going to look into that. I think that's quite serious. I've been noticing there's a lot of cracks also in the commercial property market, that is in the UK as well, and it seems to be happening in the US. So we're going to go over that story. Before I do that, I've noticed a few things in the last 24 hours that most people probably have noticed. One of them is that Texas governor issues statewide order to wear masks in public. So I always thought Texas would be the last state to do this kind of stuff. So I think that's quite surprising. I saw that Alex Jones and InfoWars, they're out in Austin, Texas protesting. I saw he's driving down the streets with an armored car that looks like a tank. So do I agree with a lot of what Alex Jones says? Of course I do. I have followed him for many years. A lot of the things I learned about the whole system, he brought that out. But I think sometimes he can be a little bit of a agent provocateur on the other side of the political spectrum, of course. But I thought this is interesting that Governor Greg Abbott has issued this executive order. It's not getting as bad here in the UK. They're only making us wear this face covering or masks, whatever you want to call it, if you go into public transport. Some businesses might want you to wear them. Personally, I think these masks are useless from what I've seen from doctors, from Dr. Fauci talking about it as well, from the UK medical officer as well, saying that they're not very effective. So that's one of the interesting things I saw, the fact that Texas now is doing this. The other news, of course, is the arrest of Ghislaine Maxwell, who was Jeff Epstein's madam, who allegedly helped him procure young underage children, of course. And she also happens to be the daughter of disgraced Robert Maxwell here in the UK, who stole hundreds of millions of pounds from, I think it was the Daily Mirror pension fund. So that's the kind of people they are, these people. But an interesting story I saw in the Telegraph about how they caught her. And it says, in court filings, prosecutors said she had been hiding out in locations in New England since Epstein's arrest in July 2019. The filings alleged that Ms. Maxwell appeared to have been living on a 156-acre property in Bradford that she had bought last December in an all-cash purchase, using a limited liability company to shield her identity. So I thought that was interesting, an LLC. And that's the way the 1% work. They've got all their money in offshore companies, in British overseas territories like Bermuda, Turks and Caicos, Bahamas, which is a former British territory, of course, or Panama, or any other offshore tax haven, and they use these LLCs to shield themselves. And because, can you imagine if I had owned that property and I knew that it was Ghislaine Maxwell wanting to buy it, and knowing what I knew at the time, I wouldn't have sold it to her. But if it was some kind of company, Acme LLC from Hamilton, Bermuda, I probably wouldn't have looked very closely. But I have to say the lawyers involved in this need to be looked at, because they knew who was behind. The lawyer acting for this LLC company knew who was behind this. So I think this lawyer needs to be investigated. But this is how all the big hedge funds operate. They're all LLCs. They're all offshore. And that's how they avoid paying tax as well. Am I saying that tax is a good thing? No, but they've made it so oppressive, the taxation for us here, the general public, that all these one percenters, they leave everything offshore, LLC. So I thought that was really interesting. We'll have to see what happens with this case. Just wanted to put that out there. Of course, today the markets as well are going to be quieter here in Europe because the US is closed for the 4th of July weekend. Of course, 4th of July is tomorrow. Yesterday, we had the jobs data. It was another better than expected number. What do I think about the jobs data? Well, as I've said in the previous jobs data, I think it's very hard to say what's going on. The non-farm payroll numbers, the statistics, it's not real people. They're just doing surveys. So I think it's still going to be very volatile right now. I think, of course, the Trump administration is trying to milk these data to show that everything's great and rebounding. And I do admit that things are rebounding, of course. If you shut down an economy through March and April, and then you reopen it, of course, people are going to go back to work. So I'm not disputing things are improving. I'm just disputing how well they're improving. And I think we will only find out about what really happened this year, maybe in 12 months, 18 months time, and then it will be too late. People will probably have forgotten about these numbers. I recommend an article on Zero Hedge yesterday. It says jobs data officially broken, ? More people getting unemployment benefits than there are unemployed workers. So they're just talking about the fact that this number doesn't make sense. But at the same time, they say that the way things are with the shutdown and all the programs for furlough or unemployment insurance, all the help from Congress, it makes it all very confusing. So that's what I have to say about that. What else is going on? The Fed's balance sheet, they update it every Thursday. So I had a look at it. That's still coming down. So it's come down about $150 billion in the last month. It was at $7,165,000,000 on June 3rd. And the latest number for July 1st has it at just over 7 trillion or 7,000,000,009. So it is coming down. What does that mean? Well, it means that there are assets in the Fed's balance sheet that are maturing. They're getting the cash paid, so it's going off their balance sheet. Or it could be that there are securities there, for example, that they're buying now, ETFs, corporate bonds, and all these programs. Maybe they're losing their value, their mark-to-market value, so the Fed's balance sheet is dropping. I'm not sure if the Fed marks its balance sheet to market or if it marks it to maturity, but be as it may, the Fed's balance sheet is dropping. So we're actually seeing QT, quantitative tightening, in the Fed's balance sheet. One might argue that's not good for precious metals. True, but then you look at the M2 that was actually also published, updated yesterday. And what is M2? Well, let's have a look at what M2 is under Investopedia's definition. It says M2 is a measure of the money supply that includes cash, checking deposits, and easily convertible near money. M2 is a broader measure of the money supply than M1, which just includes cash and checking deposits. So it includes things like money market funds that you can easily convert into spending money. So it's a good measure of the money supply. And if you look at M2, it's actually still going up. It's at almost $18.5 trillion. We were towards the end of February at 15.5 trillion. So that's increased by 3 trillion. So that's the 1-year chart. And I'll show you the maximum chart. And you can see that this is a very, very unusual increase. So I think that's inflationary. And by inflationary, I mean rising consumer prices. That's going to seep into the economy. And if the economy is recovering better than people would have expected, like the jobs number maybe is showing, then this is a cocktail for an inflationary period, I would say. Now to the commercial mortgage-backed securities market. And you need to understand that Wall Street, City of London, they love their derivatives. That's how they increase their earnings. And why is that? Well, because it leverages everything. The derivatives are just side bets on underlying securities. I saw a tweet yesterday from Ben Rickard. He's a character in the Big Short movie, which you need to watch. It's about the 2008 crisis. Ben Rickard is one of the characters, but I follow Ben Rickard on Twitter. And this is just a pseudonym or a nom de plume for this guy's Twitter account. He's actually contacted me through Twitter. And I'm not going to say too much more other than that he works for a big financial institution on Wall Street. So he knows what he's talking about. And this is what he said yesterday. The movie The Big Short came out a few years after the '08 global financial crisis. It talked about subprime mortgages and the subprime collapse. Fast forward 12 years and the whole thing is playing out again in the commercial mortgage-backed security market. And you need to watch The Big Short to understand that the mortgages themselves are not the problem. Well, sometimes they are, of course, because they are packaged and they package different rated mortgages. And by rated, I mean their credit ratings, and to make them seem better. So basically, they mix good mortgages with bad mortgages, and they think that they can, by doing that, neutralize the risk. But as we know, it didn't neutralize any risk in '08, and the whole thing imploded. It led to the collapse of Lehman. It would have led to the collapse of all the other major banks unless the US Treasury, the taxpayer, the Fed hadn't come out all guns blazing and bailed them out. And even Ben Bernanke, the chairman of the Federal Reserve at the time, when the subprime market was unraveling, he said it wasn't going to spill over into the major economy or into the other markets, and he was wrong. So this is what Ben Rickard thinks now is happening, and I kind of agree with him. I guess one question I would have: won't the Fed be able to save these banks and this market like they did in '08, '09? Probably they will do the same, but all it will mean is more and more QE. It's going to go nuclear again. Maybe the money printing. We'll have to see. I've noticed in the last few weeks as well, here in the UK, for example, the commercial property tenants, which are like shops or offices, businesses that use offices, they pay their lease or rent for 3 months. And I think it was June 23rd or 24th was the deadline for the next quarter that people had to pay their rents. But of course, a lot of these businesses, yes, they're back and running again. Some aren't because of the lockdown. And I saw this story on June 25th. A day or two after the deadline, and they already had kept track of how the tenants were doing in terms of paying their rents. And it said just 18% of rent collected by commercial landlords, concerns that some tenants who can afford to are choosing not to pay their rents. And There's also a big story on Zero Hedge yesterday about the CMBS, Commercial Mortgage-Backed Securities market. And you can bet the derivatives that have evolved from this CMBS market is in the trillions, maybe hundreds of trillions. Yeah, you really need to watch The Big Short to see how Wall Street, the City of London, really hypothecate things. Of course, in London, they can hypothecate as many times as they want. What does hypothecate mean? Well, that's the way they structure the derivatives. You can create derivatives and leverage it as many times as you want. In New York, there is a limit to how much you can leverage, and that's why all the major U.S. banks, all the major investment banks in the world are in London as well, because you can do these kinds of shenanigans. So, for example, they could trade a mortgage-backed security, commercial mortgage-backed security, 1,000 times over, even though there's just one property. That's the gist of it. So the Zero Hedge article says, stunning surge in new CMBS delinquencies heralds commercial real estate disaster. And you can bet that all the big banks, all those banks that are in the New York Fed's list of primary dealers, they're all involved in this. Also, a lot of the hedge funds, a lot of other financial institutions. So I'll put a link below in the description to this article from Zero Hedge. So I would keep an eye on this story. It looks like it's just starting to evolve. It could be something big. And Ben Rickard, he knows what he's talking about. I've corresponded quite a bit with him on this subject. So what about the markets this morning? Well, I'm a little later this morning. It is 9:02 a.m. London. Yeah, the U.S. markets are closed today. One thing I noticed from the bond market yesterday is that the 10-year yield is still relatively low, considering we've had a very good jobs number. Yeah, the stock market didn't close on their highs yesterday. They came off, but they still finished up on the day. So the 10-year yield closed yesterday at 0.67, which is pretty much where it was yesterday morning when I made my video. And I think if the bond market had believed the job numbers, that yield would have gone up to around 0.75, and it didn't. So right now, we've seen gold recover quite well as well. We're back above 1772, which is a key level. It had been the highest quarterly close since 2012. It was in 2012. We closed this June. We closed around 1780. Yeah, we dropped in the last couple of days just below 1760. But right now we're still at 1775. We're only about $13 from the recent highs. So I think gold is just taking a breather right now before making another leg higher. Silver's underperforming a little bit here, but we're just around $18 right now, up about 7 cents. The Dow future is trading. It's up 84 points. S&P futures up 9. NASDAQ 100 future is up 42. Sterling is down 0.1% at 124.54. The euro is unchanged at 112.32, and the dollar yen is also unchanged at 107.47. WTI crude has been really steady for the last 2 to 3 days. We're just stuck around 40, just above 40. It is down about 50 cents though overnight. To my American viewers, I wish them a great 4th of July weekend, even though I'll probably be making videos tomorrow. But if I don't speak to you before then, yeah, enjoy yourselves. And remember what the 4th of July was all about. It was about kicking out a king that had become tyrannical. Anyway, if you enjoyed this video, make sure you hit the like button. Please share it far and wide. Think about subscribing to my channel if you haven't yet. And you can also follow me on Twitter, Facebook, Parlay, and all these other platforms below here. I wish you all a great day. Take care. Bye.